Hey everyone, welcome back. Today we're breaking down the Australian share market after the ASX 200 closed somewhat lower, extending a recent pullback but still holding above deeper support levels. The day started with a modestly higher open, but the index quickly turned weaker and spent the session under pressure, ending the day in the red compared with yesterday's close. Overall, it was another choppy, risk-sensitive session rather than a clean breakout in either direction. The main driver behind the softer tone was global risk sentiment. Middle East tensions remain elevated, and that uncertainty has kept global markets cautious, with Wall Street edging lower overnight. That created a slightly negative backdrop for the ASX, making it harder for the index to regain its recent highs. The RBA's hawkish-leaning stance also continues to weigh on rate-sensitive areas of the market, so any fresh geopolitical flare-up tends to amplify that pressure. When you break it down by sector, the picture is mixed but clear. The materials sector was one of the weakest pockets of the index, with miners coming under renewed selling pressure. The drop was driven by concerns around global growth, weaker commodity price signals, and profit-taking after a strong run higher earlier in the year. As uncertainty grows, investors are pulling back from cyclical resources and rotating into areas that feel more defensive or better hedged against volatility. At the same time, the energy sector stood out as a relative bright spot. Several energy-related names pushed higher even as the broader market sold off, with a few liquid names and some mid-cap plays featuring among the stronger performers of the day. This is a classic risk-on within risk-off move. When global risk-off hits equities but energy price risk remains elevated, investors often switch from miners and tech into energy and commodities as a hedge. The impact of Middle East tensions on the ASX is twofold. First, it keeps global risk sentiment fragile, which tends to drag cyclicals like miners and some tech names. Second, it supports oil and gas prices, which directly benefits the energy sector and some industrials linked to energy-related supply chains. That's why we're seeing a split where miners struggle while energy and related plays find bids, even on a down day for the index. In terms of top-performing ASX stocks today, the strongest names were again clustered in the energy space. A handful of very liquid energy stocks led the upside, while several mid-cap and small-cap energy-linked names also made a strong showing. There were also a few industrials and select materials-linked names that bucked the broader trend, but those were exceptions rather than the rule. The true story today was still one of broad-based weakness, with just a handful of sectors and stocks catching the bulk of the buying interest. If you look at market breadth and volume, the day was more of a broad-based pullback than a narrow move session. The index closed deeper in the red than where it opened, and most of the heavier weight names were dragged lower along with the index. Volume picked up slightly in the afternoon as the sell-off accelerated, suggesting that intraday traders and institutions were either adding to shorts, cutting long positions, or rotating into defensive or energy-focused pockets rather than stepping in to buy the dip. From a strategic standpoint, today's move once again shows the importance of having a clear framework for navigating volatility. When the ASX swings on geopolitics, rate policy shifts, and sector rotations, having a disciplined approach to entries, stops, and sector rotation signals can make a big difference for your P&L. That's exactly where a research-driven partner like V2U Research can add value. If you're an active trader, investor, or a business working with markets, V2U Research provides in-depth analysis, sector-level insights, and structured frameworks to help you understand moves like today's without guessing. Whether you're watching banks, miners, energy, tech, or defensives, our research helps you identify leading indicators, map key support and resistance zones, and spot sector rotation signals before they move the index. For many of our clients, that means better timed trades, cleaner risk management, and a clearer macro narrative to guide their decisions. If you found this breakdown useful, make sure to hit the like button, subscribe, and drop a comment with which part of the ASX you're most focused on right now, whether it's miners, energy, banks, or tech. If you'd like to see more tailored breakdowns or want to explore how V2U Research can support your own trading or investment strategy, make sure to check the link in the description. Until next time, stay sharp, keep your risk under control, and we'll see you in the next ASX Market Wrap.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.